everybody. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure there is pretty much the same, except these snap covered calls expire this week. Alright, we got some earnings here after the close. Definitely a lot going on today. What's with Carvana? Carvana to the moon. Bates called it if he's still here. Wow. Oh my gosh. 40% up after the thing was already at 80-something dollars. It's wild. Q1 rev, big beat. EBITDA margin, big beat. Retail vehicle unit sales, big beat. Large short float. Whoo, goodbye. That's a biggie. That's a biggie. I sometimes wonder when you see like Carvana up 40%, if like I was keeping in the back of my head that a short squeeze in one place in the market can potentially lead to short squeezes in other places in the market. We certainly saw that in years past. It takes a lot, you know. You would need a fund to be over leveraged the short side in this Carvana and basically be blowing up here, which forces them to cover other shorts that they have, which, you know, in turn triggers buy stops or margin calls on other funds that have other short positions on in some of these heavily shorted stocks. But yeah, up 44% now, absolutely spiking, really, really impressive. Qualcomm out, another biggie. Big company, tends to be boring stock though. Qualcomm up. Seeing nice guides here for the third quarter revenue and adjusted EPS. The revenue, I guess, is kind of in range. The EPS is pretty decent, but stock's trading up on it. We got DoorDash out. I don't really care about this company. Trading down 12%. Doesn't surprise me. We got eBay out. eBay trading down. That's another one that doesn't surprise me. I really don't know anyone that really uses eBay anymore. I feel like I say that every quarter. Maybe some of you guys do. I don't know. AIG to buy back up to $10 billion worth of shares and boost quarterly dividend to 40 cents a share. AIG, another kind of boringer one, but that's good news. Stock's trading up on it. Oh man, what a day! I gotta tell you, I've been in this business for a while. I've traded for a long time. I've seen a lot of crazy things over the course of the years that I've been trading, and I guess today isn't necessarily a big crazy thing. But I'm like more surprised and more shocked about the way that we closed today and the degree of the sell-off in the last 30 minutes than I feel like any market move that I've seen come in a while. I'm really shocked and surprised by the degree of the sell-off. You know, started like as a little bit of a pullback here at 3. Oh, really? Is it started as a little bit of a pullback here at 325, and then you know, seemed little corrective action. Maybe they're shaking some people out. That's what I was thinking there at 325 into 330. By the 335 candle, 5 minutes later, I was like, ooh, this is becoming a little bit concerning. They're pulling this market back more than I would expect. You can see it in the SPYs, Qs, whatever. We rested for 10 minutes and then broke down even further. Let that ADMA catch up and broke down even further. I'm surprised on that move. I thought that Powell was as dovish as he possibly could have been today, personally. I thought that this was like as bullish of a case as possible. It's pretty much everything that I think that you were kind of looking for as a bull, starting with the reduction of the quantitative tightening, which the market had begun to expect, but when we read in the morning meeting today that note from the Mitsubishi Financial Group that was out earlier in the week that kind of laid out the various cases for, what the Fed could do and potential market reactions. The hawkish case that I think would have brought interest rates up and hit this market would have been if they were just delaying the tapering of quantitative tightening, till an unknown time. The slightly better scenario would have been a start in July. The really good scenario is a start in June, or a start right away. And they said that they're starting in June, and they said that they're going to be tapering by more than the market expected. So that seemed bullish to me. And the yen really trading higher here. So that seemed really bullish to me. And then his language seemed very dovish to me. He was very adamant from what I saw that policy is currently at a restrictive rate. Policy is at a restrictive rate. That's what he's seeing in the data. There is absolutely no need at all whatsoever in the near future to hike, which there started to be some chatter around that, though I personally believe that there was no chance that would happen. I think that he very much confirmed it. And obviously he, data dependent, and we need to see that the stalled out move on of inflation continues, but he seems to believe that move down to 2%, even if it's taken a pause, is going to continue. And it almost seemed that, again, it goes back to what I was saying in the morning meeting about how I felt that coming into the Fed day today, the market had begun to overprice in the higher for longer compared to the language that I was thinking would come from Jerome Powell. It seemed like the market had finally hit a point here where they were like, cuts are not happening, higher for longer, even beginning to see some chatter about hiking. So the market prices that in, and it priced that in, I think, into the sell-off a little bit in April. So I thought that if we saw relatively dovish language out of Powell today, that it would just lead to a big bump higher on the market. What I said in the morning meeting today, which at least initially seemed like it was correct, was that because of the where sentiment currently is on interest rates and on the Fed coming into today, and because of where the market is, that the risk is to the upside. I felt that if he came out with pretty much the exact language that he came out with today, that the market would absolutely jack higher. And again, that the potential of an upside move off of his language being dovish was actually bigger than the potential of a downside move. Not to say that a downside move couldn't happen, but the potential of a downside move if his language was a little bit more of the higher for longer. Unless he very specifically said hikes are back on the table, then the market would absolutely get destroyed. But outside of that, I felt that any down move would be relatively muted today off of his language, and again, that the risk was to the upside. So therefore, this initial move that we saw from this market made perfect sense to me. This made perfect and complete, utter sense to me based on what we saw starting at 2 p.m. with the quantitative tightening tapering, then his language that we were seeing at 2:30, 2:40, saying that rates are restrictive, saying that hikes aren't happening. He even addressed stagflation and was basically like, I don't know what everyone's talking about with stagflation. That doesn't seem to be a possibility to me at all. He couldn't have come out, I didn't think, with a more rosier picture on the direction that the economy and inflation are currently moving, even if it means that we're not going to see a full 3 cuts this year, which the market has more than priced out of expectations at this point. So the initial move higher in the market was exactly what I was expecting. It's exactly what I was looking for. I mean, what a rip. We went from $500 to 508. I guess we really started at 501 at 2 p.m. Got to ticked above 508 during that press conference, And then it was pretty much as he got off stage, I have no idea what happened here. I really have no idea what happened here. He finished speaking, and the market said, you know what, forget it. We decided that we don't care, and we're selling back down anyway. I do think that there was a telegraph on the market down move with the TLT. The degree of the selling on the TLT came in first, and Pat did a really good job noting that. So that was a telegraph that they could hit the market down. But as far as just applying my rationale, logic, and thesis onto the market, I'm stunned by the degree of the sell-off in the last 30 minutes here. I'm stunned that we closed on lows. We closed on lows. We ripped from 500 basically low of the day, 501 starting point for the Fed to 508, 7-8 up dollar move, just to lose that 100% of that move and close on lows in 30 minutes into the end of the day after he was done talking, which really kind of blows my mind. Part of me wants to say don't overread this because we know that a lot of times it's the day after the Fed move that the real move comes in. So let's see what happens tomorrow for sure. Most of the time on a Fed day from that 2 to 4 p.m. period, it's more the robots and the day traders moving the market than anything else. And the next day, it's really the bigger fund managers after they've had time to digest the news. The bigger fund managers then come in and move their money around, and it tends to be the bigger real money and see, we'll see what actually happens. But yeah, I'm stunned by the degree of the move here, really. But let's see what happens again tomorrow. From a technical perspective on the daily chart with the candle, this is not a good candle for bulls. I would still classify the market as big picture neutral here because we're below 510 and we're below 515, but we're also still above 497.50. But you don't want to see that a big upside tail coming into the market. You can see it with the SPYs, you can see it with the Qs, you can see it with the IWM. The IWM I guess at least closed green. The SPYs and the Qs closed in the red after being up pretty big at a certain point today. It's just not really. If anything, it looks like a continuation down candle, like a continuation shooting star that's setting you up to break support levels. So that's the technicals. And again, just because I have a thought process or whatever with what I'm seeing on Jerome Powell, I always want to recognize with myself first and foremost that price action is what pays, and I can have all the thought processes in the world, and a lot of times those thought processes and theses help me with my trading, provided that I remember not to get stubborn with that thought process and remember that it's the price action that pays and that the market is always going to be smarter than I am. But again, I'm pretty shocked. We do now have this move here from the yen, because it looks like there's some intervention. So that might actually help equities tomorrow. We'll see. By weakening the dollar out a little bit, so maybe that can provide some relief as well. Then obviously we have Apple after hours tomorrow also, but trying to think of what else I have to talk about. I really don't have anything else to talk about. It was all about the market today, So sure, there were plenty of individual earnings names that you could talk about. I ended up really just kind of primarily focusing on the market. We talked about Lemonade, but that turned out to be a little bit of a dud after it broke this opening low, and was a kind of a failed trade there. We talked about Pfizer versus 26. 26 held well, but certainly a little tricky that this low broke that low. I don't even know what some of these names did, to be honest. DuPont, we talked about in the morning meeting, that held in pretty well, but pretty much went sideways all day. Just GOLD I saw failed down off the open, so I think that took that idea off the table. Pinterest, I said, was my favorite name and kind of favorite idea. I thought was the real winner of the earnings reports last night and this morning. So Pinterest, if anybody nabbed some day trades in there, this was a good ascending triangle break that occurred. There were some trades there that could be had. The bigger names that I actually wasn't as interested in today were AMD, which stayed weak, SMCI, which stayed kind of relatively weak, and Amazon, which stayed very sloppy throughout the trading session, which is kind of what I expected. It's why I warned that we should probably stay away from Amazon throughout the day. they were tricky. But the real show today was all about the market. There was opportunity in the beginning of the day. We called out a couple, cute longs, I think, like off of this low here in the SPYs, then off of this low here in the SPYs, which turned out to pretty much be the low of the day. Those trades worked out okay, but really generally on Fed days between 11 and 2, you don't want to be doing too much. So even if you took this long here, you probably should have taken it with smaller risk. Shout out to Josh on providing information on seeing some large order option flow on SPY 0 DTEs for 503, because it made me think like, wow, that's a great way for me to put on my thesis into the market, my thought process, which was that I thought that the potential pain or larger move would be more to the upside today than to the downside. So jumped in small on some of those 0 DTE SPY 503 calls, sold them above, I think, 505 into that up move for, I don't think it was quite 100% move on that, but it was nice little trade and way to put a thesis to table for the market that kind of at least initially worked. I'm glad I didn't hold them to the close, because that again, I'm still spellbound by the degree of the sell-off into the close, let alone my P&L swings over the course of that hour and a half or so from the conference until the close. So yeah, I really don't have anything else to say about it outside of expressing kind of my surprise on the degree of the down move in the last 30 minutes. I feel like I'm more surprised now from that move than I have been from any move in quite some time, and I think that says something, because pretty much nothing shocks me anymore when it comes to trading after the amount of time I've been doing this. And that's all I got. So I'm happy to answer any questions that anybody has, or if anyone wants to point out what I'm missing that maybe led to that sell-off, that'd be cool to know too. So cool. I don't think I'm seeing anything in the VTF yet. Just some of this Japanese yen stuff. FXY on the move to the upside. How are we doing since the market closed? A little bit of a bounce. Yeah, real small bounce from the closing print. I guess it's almost $1. No, it's not. It's less than that. 30 cents in the SPYs. Yeah. Popping over to the YouTube because I'm not seeing anything in the VTF. Formula One was saying that we rejected perfectly from the 61, the 0.618 fib retracement. I assume that you mean the fib retracement of yesterday's down move, or the combination of yesterday's down move into this move. Yeah, I don't pay attention to fib numbers specifically. I do pay attention to retracements. So just eyeballing it, it looks like a solid, 2/3 retracement or whatever of that down move. From Robert, how do you manage your expectations when trading individual stock with fresh news catalyst? How much do you want to see the market on your side when trading a stock with fresh news? And then I see you've got follow-ups to that question in there, or you're providing more information. I'll start with that. So I'm always paying attention to the market, and I think that the market always matters for any stock that you're trading, but it matters significantly less when you are trading something that's in play, something that had an earnings report as an example. I do think, and I saw that you had snuck in a question that was similar to this yesterday, Robert, but it was after I had already ended the meeting and I didn't see it till I was done. I think you were asking me about Roku yesterday when I was trading the news. You also want to pay attention to, I feel like sometimes the news matters even more in the beginning of the day and the market matters even less. And then as the day goes on and the volume, the increased volume from the news starts to die out, that the market itself starts to have a little bit of a bigger impact all within the same trading day. I definitely felt it was that way with Roku yesterday when we were trading it, and I even communicated it to the VTF. When in this like 10:30 to 11 o'clock period, which is when I'm usually getting off the VTF radio, I remember communicating now as it was sitting here that this market, the market for the stock Roku might now become more beholden to the actual market, and that's what occurred. In the beginning of the day, this thing was able to fully ignore the market. It was doing its own thing. It was trading on very high volume, and I do think that the volume has a lot to do with that. But as the volume was dying out, we saw the market weakening out. I was worried that this thing could die off a little bit, just more based off of the market and less on the news, and that's kind of what happened. And I see on your follow-up portion of your question here, you're asking me about Amazon. So, for example, Amazon with good earnings today was not able to be relatively strong to the market, while Pins was able to go against the market today all day. Trying to navigate here when I take the market into consideration and when not to. Sure. So, the one thing that I would note with Amazon, and this is what we said in our morning meeting, was that based on how Amazon traded after hours and based on the specifics of the earnings report, I thought that Amazon was actually going to be kind of sloppy and relatively out of play for a mega cap earnings name. Because most of the numbers were good, but the revenue guidance was light, and they seemed like they were counting each other. And the after-hours action yesterday was just hovering around that 180, which, yeah, I know that Amazon sold off $5 in 10 minutes into the close yesterday, but really, Amazon 180, as far as I'm concerned, is almost like the starting point into the number. So, yeah, we sold off. If you exclude that $5 sell-off in 10 minutes, Amazon spent the entire after hours yesterday more or less trading back and forth around that 180, which seems to me very out of play and kind of where it had started from. So, again, Amazon being a little more out of play than typical on its earnings report maybe has it a little bit more beholden to the market than it would otherwise if there was bigger consistent volume. Whereas Pins was a much bigger surprise. It was a phenomenal report, and look at the consistency of the higher volume that Pins had all day throughout the day compared to what it did yesterday. Whereas Amazon, of course, is going to have elevated volume as well because it's on earnings, but look how quickly actually Amazon's volume was kind of back to normal if you just compare it to yesterday's trading session, which was a pretty boring trading session throughout the day except for the last 10 minutes. The volume in Amazon by 10:30 was right back to where it is on any other day, and even before 10:30, it wasn't really that elevated compared to, considering considering that there was an actual earnings report. So I think that that's what you want to take into consideration when you are trying to balance the independence that a stock can have from the market when it's trading on news versus the all-important market that there will always be a correlation to. So, thanks for the question, Robert. Next here on YouTube is from Uvixi Bull. For the past 2 days in a row, the last 10 minutes of the day, the market gets whacked. Is this caused by some weird options activity, or are we just selling off in the last 10 minutes for another reason? So I don't think it's necessarily from any wacky options activity. Imbalances are always going to be really important, and imbalances can create really big moves. We also saw a really good chart from Dennis in the VTF yesterday, which I don't know if he's still here or not, that basically just shows the growing importance over time of the last 10 moves insofar as market volume traded and also the movements that are occurring. I really don't know what the reason is for that, to be totally honest. It's interesting. It's something that I've taken note of since literally yesterday when Dennis brought it to my attention. But we saw it in a big way yesterday. We saw it in a big way today, but I would take today with a grain of salt because, the market was moving insane for the last hour and a half just because it was a Fed day. So it's definitely something notable and worth paying attention to. I don't really know the direct cause. From Formula One, do you think now if the job number is bad on Friday, it would be bullish? As he said that one of two ways he would considering cuts is if the labor market starts weakening. But I think he also said that would need to be like an extreme weakening of the labor market. which I don't think that you'll get from one job print. Next part of your question, but I guess that's a two-way street as well because a weakening labor market isn't good for the economy. Can you talk through hypotheticals if we get a good number versus a bad number on Friday? So my broad thought process on economic numbers recently, which I think still applies today. Um, and then I maybe have an update to the thought process a little bit actually based on Jerome Powell today. But uh, broadly, my thought process has been that what we want is like smaller amounts of economic growth right now. We don't, smaller amounts of economic growth, I feel like, are the sweet spot because you don't want a weakening economy that could indicate recession. The people seem to have forgotten that word recently. That could indicate recession or they could indicate stagflation. You don't want a real slowing of the economy. That'll probably hurt the market because it's a slowing of the economy. You also don't want major economic expansion right now either through jobs or anything else. I mean, you saw what the unemployment cost index did yesterday to the market when that came in hot. You don't want things coming in really hot either because that indicates inflation. I think that the best thing for the market right now, and I don't know what the market's expecting on Friday's number at this point. It's too early for me to have done that research. But I think that what is the best thing for the market right now is numbers that kind of walk a fine line of indicating economic growth without expansive economic growth. That's kind of been my general thought process. The thing that I'm scratching my head about a little bit today is, again, I thought Jerome Powell was almost as dovish as he possibly could have been. And the scenarios in which you will get cuts are because the labor market like extremely weakens out, which I don't think will happen, or inflation starts to really come down. So I guess circling back to your question on do I think that a bad number on Friday would be bullish, I think that it would actually be less bullish now than it would have been before today. Because unless it's such a bad number, like, and even then that's not going to be bullish. Like a really bad number, like I just said, it's probably not going to be bullish because it indicates that the market is weakening out. A slightly bad number, I may have thought would be bullish if you asked me yesterday. But after seeing how dovish he was today, I don't see how he could be more dovish because the number comes in slightly bad. It's not going to be enough for him to all of a sudden move cuts forward. I don't think it'll change his thought process. So I almost feel like that is less bullish now than it would have been yesterday. But maybe I'm overthinking it, and maybe it's too soon still, and I got to digest some of this information. But I hope that helps there, Mr. Formula One. From Kevin, it sucks being super patient and then getting run over on some longs on the pullback on the Qs. Yeah, that probably would have been the toughest trade that you could have done today, which I honestly would have supported. Would have been trying to buy the SPYs or the Qs somewhere in this pullback here, like this 330 to 335 kind of period. By the end of the 335 candle, I would have argued that the market pulled back too much. But if you were like, all right, everything's looking great, Powell's super dovish, the market's super strong, oh, look, they just shook some people out, like, let me go long versus this tail, that would have stopped you out, or let me go long into this pullback to this 21 EMA area, that would have just totally run you over real quick. That is the toughest trade that I could have imagined out there. That you could have gone, which is why it's always important to make sure that you're managing your risk. But if that's where you try to step in for the first time, it's really difficult. It's also why you want to manage your risk. It's also why you want to wait for a real technical setup to put your trades on, and not just buy on the way down because it's approaching equilibrium because you think that the news was good. T squared doesn't see the stag or the inflation. It looks like there is intervention on the yen that's potentially happening right now as we are having this conversation. The yen caught a pretty big bid. You can see that with the FXY ETF is just, it's continuing. And shout out to Peter for getting that in the VTF super early. I didn't even think to buy it, but you could have bought that FXY when Peter here called it out in the VTF at 417, that information. And still pretty big move from that point. More on the YouTube. Looks like Dennis from the VTF is commenting on the YouTube. I like that. We get more comments on the YouTube. The chart on increased vol at the close was actually broad over the last few years, but interestingly, we're seeing proof of it, but it could be a coincidence in recent days. Yep. What it means to me is that it's worth sticking it out until the close as a trader. Yeah, I just never been a huge fan of new executions into the close. You could put some scalp trades on. I just hate that time limit, because if I'm putting something in the on something new on into the close, and again, maybe there's some scalps that could be made. If I'm putting something new into the close, I'm probably gonna not feel like I've got a big enough of a profit cushion to keep the position overnight, and I've only got 5 to 10 minutes to make it work. And I like having time on my side where, you know, if I'm putting something on at 10:30, I've got that entire trading day still to be able to let that trade kind of play out and work a little bit. But it's definitely worth noting. Yeah, you're also shell-shocked on the sell from the close. I'm really surprised by it. 428 Qs extended wick is where I went long. This one here. Yeah, gotcha. I don't hate that trade at all. Popping back over into the VTF from Rich. Would you please give us your thoughts about how Apple has been trading into earnings? Also tomorrow, which levels up, down should we be focused on? Okay. I've been kind of avoiding Apple because it's been one of the most relatively weak names out there. I mean, this is a stock that I've got personally a long history of trading a ton of for periods of time every single day. And I've been really shying away from it because it's been relatively weak. It's been sloppy. You've had a few of these spikes, a few of them caused by news that then turn around and entirely get sold off. We have this report tomorrow. You should never count out Apple. That would be the first thing I would say. Never count out Apple. Never count out the capacity of their cash flow, their cash on hand, their ability to increase a buyback, things like that. And I know that to some degree the China situation should be priced in by this point, because we have been seeing reports for months now on the slowdown on Chinese purchases of iPhones and things like that. I'm still concerned about the Chinese numbers on the Apple products, to be totally honest. I'm still concerned that could handheld sales from Qualcomm in China were up huge. Thanks, Ruck. That's good to know. So it's something that I've been concerned of. Just because it's a huge part of Apple's business is the China portion of their business, and I would dare say that they're in some ways the one U.S. company that's managed to be super successful over in China, and we know that a lot of that is just because the Chinese government has just restricted the success of a lot of other companies that were trying to make inroads 20 years ago. But Apple's had tremendous success over there, but that success is pulling back, and that could potentially be a huge hit on their bottom line. So it'll be a really interesting report. I don't have strong conviction. You know, sometimes I've got a thesis or a thought process or something, an expectation, a bagel to head moment, as Josh would say, on a report, and I really don't have that with Apple. So we'll see what the report looks like. We'll see how bad those Chinese numbers actually are. We'll see if they make up for it in other places. We'll see if they make up for it by increasing their monster buyback or anything like that. Levels that I would pay attention to, broadly 176 on the upside, 168 on the downside is the first levels, and then further pivot that I pay attention to is 164, and then 178 on the upside and downside and upside respectively. The yen is trading like Carvana. I love it. So thanks for the question, Rich. From Carol, when Powell was asked if he sees some of the numbers concerning, he said not really, but he hesitated for a moment. It could be the market is not happy that there's a difference in the numbers in the Fed language. I don't know. at the end of the day, I think that the market cares almost in some ways right now more about what the Fed is planning on doing and saying that they're going to do versus almost anything else. So, I mean, at a minimum, I would say that there was no way that the Fed language could hurt, right? Even if the market itself is still worried on a read through on the numbers, I mean, maybe that's exactly what, maybe you just hit the nail on the head there, and that's exactly what's going on. The market said, okay, that's nice, but we still don't really like the direction that things are going, and we're selling back down. I don't know. It seems like a pretty big read through though to get to that point. So maybe, I don't know, maybe. Roxanne, I think hesitations this meeting may have been because he was being criticized for meeting minutes not matching the commentary from last month. Oh, that's good to know. I've always thought that, especially in more recent years, maybe not when Jerome Powell was new, but I always thought that he was very calculated in how he would speak, meaning like not afraid to take a moment to think about the right answer to a question before just jumping into it. That's kind of always just been my personal take on him. I actually didn't listen to him speak. I just, read the notes that Pat and Bill were posting just to get to the heart of it, which I appreciate those guys posting. The end's still running here. Big move. Cool. Seeing some new commentary back over here in the YouTube. Let's see if it is pertinent. Is it a possible reset for buying tomorrow from Kevin? Yeah, so that was one of the things that I was saying earlier, was that I'm a bit shocked by the degree of the sell-off in the last 30 minutes, but I want to take it with a little bit of a grain of salt because it's oftentimes the day after the Fed day that actually leads to the bigger trending day when the real funds can put money to work. So there is, while I would argue most certainly that closing on lows of the big upside daily candle today is very bad and bearish. The next day after a Fed day, sometimes the initial reaction from 2 to 4 p.m. goes completely out the window and has no bearing at all on how the market actually moves the day after the Fed. So we'll see tomorrow if we get to a big trend or not. That 498, 497.50 to 498 area is a really important spot still for the market. Big earthquake. Hope you're all right. Yeah, I agree with you also, Kevin. All right. Looks like I got through everything. Heck of a day. Really wild day. Really wild, last couple hours. Hope everyone did well with it. Hope everyone survived it. We'll see how we gap tomorrow. We'll see how the market reacts to all this news. We'll see how Apple's earnings are tomorrow after the close. So have a wonderful night. Do something to de-stress. Get a good night's sleep. Get your head in the game for tomorrow. I'll see you guys then. And if you're on YouTube, you know what to do. Give me that thumbs up. I appreciate it.